Good morning and welcome once again to our weekly insights. My name is Victor Aluyi and I'm the head of investments at Sankore Global Investments. I will just basically use this opportunity to bring you up to speed, with happenings in global financial markets for last week and also give you an idea of what we expect going into this week. We start off with the US markets where, the market closed slightly higher on Friday, but basically snapped a 9-week winning streak following a stronger than expected jobs report that we saw on Friday. The S&P gained 0.18%. The Nasdaq was up just 9 basis points, while the Dow rose only 7 basis points. However, for the week, the S&P lost 1.52%. The Nasdaq was down 3.25%, while the Dow lost 0.59%. I mean, the jobs number that we saw on Friday showed that the U.S. economy created 216,000 jobs as against the 170,000 that was expected. This number basically just showed that the economy remains really stubbornly resilient. As a matter of fact, just after the release of the number, we saw U.S. Treasury yields lurch higher. The 10-year basically moved higher than 4% for the first time in about 3 weeks. Again, this just shows the sort of sentiment that this report has put out there. Now, also we saw December's ISM service data. It came in at 50.6, basically indicating that business activity in the economy is continuing to expand. Nevertheless, this was lower than the 52.7 that we saw in November and the 52.5 that was expected by analysts. So all of this data put together just basically showed that the economy remains resilient, job market is too strong, business activities continue to expand. So clearly it created a sort of a negative sentiment in equities market and for risk assets in general. Market had essentially before now priced in a rate cut for March, but with this strong number, which then has potentials to, bring inflation back up, the market is now looking at a first rate cut maybe sometime, around May, basically. Also, still in the U.S., the Supreme Court is basically slated to hear an appeal by Donald Trump, by the state of Colorado. He's been exempted from the ballot. The state of Maine had also done the same thing. And this is very, very pivotal. This decision by the Supreme Court will be very pivotal. The Supreme Court is going to hear this on the 8th of February. The election in Colorado will be on the 5th of March. This will prove very crucial because Trump remains the front runner for the GOP. This election would be very, very crucial for the U.S. So this could create uncertainties on the political front in the U.S. And then this is something that we'll certainly have to keep an eye on to get a sense of how things will pan out on that front. For crude oil prices, the tensions in the Red Sea, basically stoked by these attacks by Houthi rebels, has created a situation where Maersk has basically suspended shipment through that waterway for the foreseeable future. The U.S. has issued some threats to the Houthis, but really haven't seen any consequence yet. However, the Secretary of State Anthony Blinken is going to be traveling to the Middle East this week to basically have diplomatic talks to prevent this whole conflict or this situation from getting worse. Or we just recall that this is on the backdrop of the whole Hamas-Israel situation. And what this uncertainty has done is to create a really strong bottom for oil prices. I mean, crude oil prices over the last week have hovered around between 77 and 78. We haven't seen it come up quite significantly. And it's just on the back of this uncertainty that we're seeing, in that Red Sea and in that Strait of Hormuz. And, this has potentials to really impact, oil prices, going forward. Also, the U.S. government basically significantly reduced the chances of a government shutdown that was looming on the 20th of January. It reached just yesterday night, a spending cap agreement of 1.5 trillion for the 2024 budget. This is very, very important because, as we've seen in the recent past, those debt ceiling debates, basically create a lot of political brinkmanship that cause a lot of uncertainty in markets. But I think that with this move, that uncertainty has been reduced quite significantly, really. So that's a very positive development. I will continue to keep an eye out for things on that front. Concerns around the price of crude oil remain on the floor as well, like I'd highlighted earlier. So we'll continue to keep an eye on that. Now, going into the Eurozone, inflation rebounded in December, came in at 2.9% from 2.4 that we had seen in November, although the expectation was that inflation was going to come in at 3%. So this number again basically reignites the debate around the monetary policy path for the ECB, what that trajectory is likely to be. Although the expectation is that we should see the ECB begin to dial back on rates or begin to cut rates as early as the summer. Again, really remains to be seen what the trajectory of inflation would be from here on out, as that will have a major impact and effect on what the ECB does, with interest rates. On the local front, liquidity was quite robust last week. The market closed at about 862 billion on Friday, basically on the back of CRR reforms. So we saw, very positive sentiment in the fixed income market last week. Treasury yields declined by an average of 68 basis points across curve, while bond yields declined by about 42 basis points, across curve. For this week, the market will be looking out for the Q1 FGN bond auction calendar. That will give a very clear indication as to what the fiscal authorities are looking to do. And we believe that this calendar will provide, near to medium term direction for the local fixed income market. Also in the news last week, Nigeria basically committed to an 11.5%, $3.3 billion Afrexim loan. This Afrexim loan has been in the workings. It's been in the works for some time now, but I think that the final details are beginning to come out. When this money would then eventually be disbursed really remains to be seen, but the expectation is that that should happen soon. There's been a lot of talk around the terms, but again, I think the money that the government needs to get now is to try and assuage the FX situation. We'll continue to keep an eye on that. Also on crude oil front locally, Dangote Refinery received its fifth crude shipment, and it's basically beginning to look at ramping up to start refining. The understanding is that it will get about 6 shipments before that refining start. Also, Port Harcourt Refinery, there's been a lot of talk about it. We understand that test runs are being carried out. I think the import of these refineries working is that, we should see some, if you will, reduction in pressure for FX. Again, it all really remains to be seen how quickly the Port Harcourt Refinery gets into service and how quickly things happen for the Dangote Refinery. We continue to keep an eye out on these developments because they have really strong potentials to impact things both on the local front and also internationally. So I think that's pretty much it, for last week and essentially the things that we're looking out for going into this week. We do hope that you have a very, very rewarding and productive week. Thank you very much.